Let me ask you a question. Have you ever stared at a chart, watched a massive green candle shoot up, felt that sudden rush of FOMO and clicked buy, only to watch the market instantly reverse and stop you out? Or maybe you've panic sold a perfectly good setup just because the timeline on X, formerly Twitter, was screaming that the sky was falling. If any of that sounds familiar, you're not alone. As traders, we like to think we operate entirely on logic, trend lines, and structure. But the reality is, financial markets are completely driven by two raw human emotions, fear and greed. Welcome back to the channel. If you're new here, I'm Em. On this channel, I try to strip away the noise and focus on the real mechanics of navigating a funded trading journey. If you get value out of this today, please hit that like button, subscribe to the channel and ring the bell so you don't miss out on my next deep dive. Today, I'm talking about how to quantify human emotion. I'm going to break down the two most powerful psychological indicators in the market, the CNN Fear and Greed Index for traditional finance, and the Alternative.me Fear and Greed Index for crypto. I'll show you exactly how they work, the history behind them, and most importantly, how to use them to step away from the herd and find high probability setups. Let's get into it. Before we look at the specific indicators, we have to talk about why they even exist. If you spent any time studying the behavioural frameworks of trading, people like Mark Douglas, Tom Hugard, you know that trading is fundamentally a game of probabilities. It requires a probabilistic mindset. But human beings are not wired for probabilities, we are wired for survival. When the market drops suddenly, our brains register it as a literal threat. Retail traders tend to feel fear. When the herd panics, they sell everything, driving asset prices way below their actual intrinsic value. Conversely, when the market is pumping, our brains release dopamine. Retail traders tend to feel greed. The herd piles in, buying assets at grossly inflated prices just because they don't want to miss out on the rally. It was Warren Buffett who famously said, "Be fearful when others are greedy, and greedy when others are fearful." But how do you actually know when the others are fearful or greedy? You can't just guess based on how you feel. You need data. You need a dashboard that takes qualitative, messy human emotions and turns them into a quantitative, readable metric. That is exactly what these two indexes do. They act as the ultimate contrarian indicators. Let's start with the traditional markets. CNN Money developed their Fear and Greed Index to give investors a daily snapshot of the stock market's emotional health. It scores sentiment on a scale from 0, which is extreme fear, to 100, which is extreme greed. Now, this isn't just a random dial. It's calculated by taking the equal average of 7 distinct traditional market indicators. Let's break down a few of the most important ones so you know exactly what's under the hood. First, market volatility, specifically the VIX. The VIX measures the 30-day expected volatility of the S&P 500. When the VIX spikes, it means institutions are buying insurance against a market crash. It's literally known as the fear gauge. If the VIX is high, the CNN index moves towards extreme fear. Second, the put-call ratio. In options trading, a call is a bet the market will go up, and a put is the bet the market will go down. When the volume of puts heavily outweighs calls, it tells us that the smart money is bracing for a drop. Third, the safe haven demand. This measures the difference in returns between risky stocks and safe treasury bonds. When people are terrified, they pull their money out of the stock market and park it in safe havens. Finally, they look at the junk bond demand. Junk bonds carry a higher risk of default but offer higher yield. When investors are feeling greedy and invincible, they load up on junk bonds to chase those yields. When they're scared, they won't touch them. CNN aggregates all of this hard financial data, moving around in the background to spit out one single number. If the dial is sitting at 15, the market is completely terrified. If it's sitting at 85, the typical retail trader is in a state of euphoria. And then we have the alternative.me crypto fear and greed index. But what if you aren't trading the S&P 500? What if you trade in crypto? The cryptocurrency market is a completely different animal. It doesn't have junk bonds or traditional put-call ratio that dictates the entire market. Furthermore, crypto is notoriously volatile and heavily driven by retail investors. Because traditional metrics don't translate perfectly to Bitcoin, the team at alternative.me built a custom index specifically for the crypto space. And the way they calculate it is fascinating. While they do look at market momentum and volatility, the real golden nugget of the crypto fear and greed index is its reliance on social sentiment. They scrape Twitter and X for specific hashtags, measuring not just how many people are talking about Bitcoin, but how fast those interactions are happening. An unusually high interaction rate results in greedy market sentiment. They also pull data from Google Trends. For example, if there is a massive spike in search queries for Bitcoin price manipulation or Bitcoin crash, that is a clear indicator of fear. But if the top searches are how to buy Bitcoin or best altcoins for 100 return, X return, you know the market is absolutely soaked in greed. In a market where there are no traditional earnings reports to anchor the price, sentiment is everything. This index captures the raw pulse of the crypto community better than almost anything out there. So, you know what these indicators are, and you know how they're built. But how do you actually use them to trade? If you're managing a funded prop account, say you're trading with $200,000 of the firm's capital, but your personal risk buffer is capped tightly at a few $1,000s, protecting your downside from emotional swings is everything. Whether you're spread betting the Euro CAD at a pound a pip or trying to catch a swing trade on gold, the underlying herd psychology driving those charts is identical. You use these indexes as a filter for your setups. When the market hits extreme greed, your risk management radar needs to go on high alert. That is not the time to be breaking your trading rules to chase a breakout. Extreme greed means the latecomers are finally piling in. Their rubber band is stretched as far as it can go, and the smart money is quietly taking the profits. When you see extreme greed, you tighten your stop losses, you take partial profits, and you prepare for the reversal. On the flip side, when the index drops into extreme fear, when it hits single digits and the financial news is telling you the world is ending, that is when you start hunting for entries. Extreme fear means all the weak hands have been shaken out. The asset has been sold off past its logical value. Historically, almost every major generational market bottom has coincided with maximum fear on these indexes. Remember, neither of these indicators is a crystal ball. You cannot just blindly buy because the dial hits 10 or blindly sell because it hits 90. They are tools meant to be used alongside your technical analysis, your market structure, and your own strict management rules. But as a trader, biggest edge isn't an indicator on TradingView. Your biggest edge is your ability to stay objective while everyone else is losing their minds. The fear and greed indexes give you permission to step away from the noise, look at the herd objectively, and do the exact opposite of what the panicked majority is doing. I'd love to hear from you. Are you currently feeling fearful or greedy about the market right now? Drop a comment below and let me know what you're watching this week. If you found this breakdown helpful and you want to see more content on trading psychology, funded accounts, and market mechanics, please make sure to hit the like button and subscribe to the channel. It really helps the channel grow and allows me to keep making these videos for you. Trade safe, stick to your rules, and I'll see you in the next video. And as my own mentor would say, I wish you happy trading.